Crypto is crashing. We're seeing Bitcoin down 26% the last 7 days, Ethereum or Ether down 36%, with the last 24 hours down 23%. And we're just seeing an overall crash of crypto. You know, when you have an industry that is all in the same niche, things tend to crash together, even if one of the things was the catalyst for the entire crash. So potentially, you know, there was Elon Musk tweeting, well, he did say Tesla has diamond hands, referring to Bitcoin price kind of collapsing here. At least Elon or Tesla is going to be holding on with their master of coin, saying to hold on for their Bitcoin of 1.5 billion. And with any downward movement of any time, as an investor, you should not be thinking about panicking. You should be thinking about potential opportunities. And we're seeing some real serious decline. So I want to make this video about my view on this current crash, what I'm buying, and where I think it goes from here. So if you appreciate the transparency on this channel, where I share what I'm buying, when I'm buying it, or how much I'm losing on the days that I lose it, let me know by clicking like on this video and consider subscribing. I'm not going to ask you to join my Patreon or Webull link. Just click like and consider subscribing. So let's get to it. So crypto is kind of this latest of these industries that have been just correcting, right? If you look at growth companies, or specifically Tesla here, with this further blue line here, crashing down 22% in the last month, whereas the overall market, the S&P 500, is down just 1%. This is VOO, which is the S&P 500 index that I have 1.5 million in. It's been down a little bit, but my Tesla has been down a lot. So I've been buying, but the technology companies, or these kind of high growth companies that had this huge run up, are now correcting. And now this has shifted to crypto because we've had such an amazing run up. There's going to be a sell-off, right? And that's what we're seeing. Now, I'm not the most advanced crypto guy out there. If you're wanting to just focus super hard on crypto, you know, there's some amazing people out there. I have spent maybe the last 3 months has been kind of 90% of my knowledge, just absorbing as much as I can. So credit to JC for saying, hey, you know, here's some people we recommend. He recommends you follow for just crypto content. But here's the thing, right? With buying any asset, there's a level of human psychology and these economic cycles that play a huge role in understanding what's undervalued, where's their opportunity. And I think that I have some good knowledge in that, and it's the same knowledge that I've used to build up my portfolio. It's the same knowledge I've used to build up my wealth in general. And I'm trying to apply that to the crypto markets and give you as much value and knowledge that I can about what's going on right now, because crypto is an opportunity. And this crash is like any crash. The crashes in the stock market or for an asset is often the same flow, right? Of a build up in value where the market cap of an asset will just keep rising, and humans overshoot it. We get super hyped, right? As when Dogecoin gets higher and higher, that's when we want to buy more and more. And we overshoot the value, right? We, as humans, we kind of just overvalue something, or we undervalue it, and then there's a catalyst that causes that thing to correct. We constantly overhype stuff. We constantly underestimate stuff. We never get stuff right. So that's why there's opportunity. And as an investor, if you want to get opportune positions, that's when you do it, is when there is a lack of knowledge, or you think that there is a big disparity between people's emotions and what they feel compared to the current market. And that's the overall economy too. It's a debt cycle of us over leveraging debt, taking out more and more debt to grow our businesses, and then all of a sudden causing a crash as we have to fulfill on our debt obligations. So the stock market crash is the same idea of humans and people over leveraging into a position, into a stock or into a crypto, that becomes overweighted and then corrects back into the market. That's why it's called a correction. So when in doubt, you should zoom out. That's an idea to help you get an overall perspective of what's going on. And if we look right here at this graph, what we can see here, this is Bitcoin. So, you know, every crypto is different, but there are such a correlation between some of these main cryptos. And if we look at this, so if you go to, let's say, the low of 2020, Okay, so if we go to the low of 2020, right around here at 6,000, what you'll see is the low of 2019 was lower than that, right? We're getting to the 3,000 mark. And then the low of 2018, we actually hit the low of 3,194. So the lows are actually increasing. So what that means is that there's some support level that's been increasing each year. So that's something that I like seeing, but is now a good time to buy. Where is the support level going to be that things are going to start rebounding? Now, before we dive into that, I want to kind of give you a bit more perspective. So we can't just look at the support levels and where things have gone down to the bottom. We also have to look at how things in comparison have gone up. We have to look at the run up. So what I'm going to do is I'm going to look at the 52-week of Bitcoin. So the 52-week high and low, we had a high of 64,789, crazy number. We had a low of 8,647. So where are we now? Well, we're pretty much in the middle, right? So we haven't crashed down. We're still massively up, massively up, 352% in a year. So if you could say, hey, I got 352% return on my money, that would be an amazing year. That would be a phenomenal year. That would be a year that no investor ever has been able to consistently do, right? So incredible. Now, what you can also kind of look at is, so we're still in the middle here. We're not that far down, right? There's been times where Bitcoin has been hit hard. By hard, I mean like hard. Bitcoin has seen downturns as deep as 92% in 2011. So we're going back in time here. 84% leading up to 2015. So despite Bitcoin's relatively short 10-year existence, it's the third bear market plunge of 80% or more. And by the way, this was back in 2018. So this could really fall. Now, I'm not into FUD, I'm not into fear mongering, and I'm actually buying the dip as things continue. And if they continue to go down, that's okay. In fact, maybe that's good. So things have actually changed a bit. If we want to look at the run up and kind of identify what's led to that, we're going to start seeing some different stuff. So here is a really unique graph that I thought is valuable, and this actually gave me some motivation to get into Bitcoin more and more. And this is comparing basically Google searches are in blue and the yellow is the actual price of Bitcoin. So Google searches were just on fire at the end of 2017, right? As Bitcoin hit the all-time high at that time, near 20K. And then you'll start seeing something interesting. As we recovered back to 20K towards the end, a few months ago here, the search volume did not increase. So what this means is that it could be institutional buyers, it could also be people with higher conviction adding more into their position instead of the volume of traders increasing. Now, of course, this probably has changed a bit because of Robinhood. So if we type in Bitcoin here, we'll see that, yeah, at the end of 2020, there was a run up in January. There is definitely interest. The interest is at 42. So what 42 means is it's 42% of the high being 100%, which was in 2017 at the end of the year. So that was something that was kind of reassuring to me to kind of be getting into Bitcoin specifically. So let's talk about what I'm actually doing. So my Bitcoin position is a bit higher than my Ethereum position, but what I've decided that I feel comfortable with based on my knowledge at the moment is I want to get in around 5% into crypto for my entire portfolio. So 5% allocation into crypto, the rest is pretty much stocks. I have a super long time horizon, so I'm not interested in bonds. So that would mean at 5%, I need to allocate, let's say my portfolio is 3 mil. I need to allocate 150K into crypto. So how am I doing it? Am I going to just buy it right now with this dip? What am I going to do? So 150K comes down to say 50 weeks in a year, 52 weeks in a year, but that would enable me to say 3K per week in investing. So 3K per week is what I'm going to dollar cost average to hit that 150K in the next year. So what I'm doing is automatically setting this up through Gemini to automatically purchase every single week. So although my dollar cost average is my strategy for investing. This is my overall strategy, right? As I add in more every week or so, I'm buying like VOO, buying some VTI. So what I'm doing is I'm averaging into the market. But when I see opportunity, that's when I buy. When I see Tesla at a low price, or a low price that I think is a value for me in the next 5 years, then I actually pile in. So although my main strategy is dollar cost averaging, I'm happy to buy the dip when I see the dip. And so that's what I'm doing with Ethereum and Bitcoin. Now, Ethereum and Bitcoin are very different. Ethereum's not even the coin, it's Ether. Ethereum's actually a network, but you can kind of interchangeably say Ethereum, but Bitcoin is a store of value. So when we think about Bitcoin and the value of Bitcoin, it actually, even though it's incredibly volatile, it's actually probably the more stable coin, but Bitcoin is a store of wealth, store of value. When we think of gold, we think of, okay, what's the purpose of gold? Besides wearing it and looking fly and flexing on the haters, the value of gold is you store it. If there's massive inflation, you don't care. Gold retains its value, and there's a limited supply, right? There's a limited supply of gold in the world. So that's Bitcoin. Limited supply of coins, it's treated kind of the same. Ethereum is different. There's different use cases. And basically, as people realize the innovations of Bitcoin and the value of the blockchain, people realize they can use it for different things. So Ethereum is basically using blockchain technology, not just for a decentralized payment network, but also for basically storing code to create these financial contracts and applications, so these smart contracts that actually can do things that are powered by Ether and the Ethereum network. So Ethereum's a platform, Ether's the coin on that platform. Ethereum also has a leader, which is kind of interesting, whereas Bitcoin does not have a leader. No one knows who Satoshi is, if he's alive, what his real name is, which is the inventor of Bitcoin, but we know Vitalik Buterin, which is the head of Ethereum, basically. And that's a gift and a curse. You got the team, you got the leader, but at the end, you also have maybe some degree of dependence or some cultural ideas around maybe there is some centralization because someone heads it. So I'm still early in my overall understanding, and I think that's what makes me a good investor. The ability for me to say that, to believe it, to understand it, and to not let my emotions get in the way, in that I don't know what I don't know. Okay, there's a lot of unknowns that I could, not be factoring in. Even if your knowledge about Bitcoin is so much and you're so high conviction, there's still unknown unknowns. How hard would it be for Tesla to create a currency? I don't know. What would happen if there was one little flaw that someone figured out with the Bitcoin code? Very unlikely, but that would be an issue, right? So there are unknown unknowns, and you have to invest in what you understand, where at the same time, you have to realize that you don't know everything. So you have to invest, especially with volatile assets like crypto, you got to invest in what you're at least willing to see a major decline in, okay? If not, lose it. It's my belief in 10 years, crypto could be, some of these coins could be worth 10x, right? But they could also be worth nearly nothing. So for now, I'm okay. I'm willing to put 5% of my portfolio in with dollar cost averaging. Okay, I'm not willing to just dump 150K on a purchase right now. But as I learn more, I'm going to either accelerate, I'm going to either diversify, or I'm just going to hold on to my positions of what I have right now. I also might move into realizing, what's the best transactional currency, because Bitcoin is more like gold, right? So gold is not the best, quickest, and most efficient way to buy, let's say, some food at the grocery store, right? So same thing with Bitcoin, with the time it takes to verify transactions, with the cost of the kind of electrical output on the network. So there are easier ways to transact. Which coins are going to lead the way? I want to ask you guys. So let me know in the question box what you think about the future of crypto, which coins you're looking at. Which coins are you buying? I'd love to hear from you. As always, I'll be sharing my journey along with you, and I'll talk to you soon. I'll see you later.